Here we have the current stock market analysis for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find this educational material to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So as we can see here, the share price has managed to inch out a slightly higher high relative to yesterday's trading session. And when I say slightly higher high, I mean about 10, 11 cents. So we have seen some upward price movement here, but it's been extremely minimal. And this does sort of raise some questions here about whether or not the stock is starting to top out at current levels. So in this video, we will point out some important support and resistance zones, some important price levels, so that hopefully traders can develop some profitable strategies for this stock going forward. So, as we can see here, if we just sort of look at the price structure itself, we can sort of see that, we did see a fairly significant, strong price rally. And now share prices themselves are starting to kind of roll over here at this point. We are seeing some interesting price patterns that have developed in the process. You could actually almost call this a bit of a four candle morning star pattern a bit here, but we would really need to see a share price break above, a break and close above these prior price highs, which came in around 2270 in order to confirm this. But we were looking yesterday, I believe, in the video about a possible morning star pattern here that was starting to develop. So essentially, what that is share prices will see a major downturn initially. This is normally a three candle pattern. But you can find instances where it can develop in 4 or 5 candles as well. And here I do think this qualifies because what we see here is a fairly decisive bearish movement to the downside. These two price candles here, followed by a period of indecision, which would be this sort of small-bodied green candle in the middle of the pattern here. We can see long wicks on the candle, but then a small body on the candle. And then all of this is followed by a strong bullish candle to the top side that is roughly equal in size to the bearish period that came before it. So you can sort of see the turnaround period that's occurring here. Normally, this, as I said, is a 3 candle pattern, but you can have instances where it's a 4 candle pattern. And I would say that this qualifies here, but what we would need to see at this point would be a close above roughly 2265, because you need to close above the pattern in order to sort of trigger the pattern. And we have actually seen share price movements spike above there briefly with this 2282 spike high that we've seen most recently. But the problem there is that you didn't get a close above there. You would want to see a close there on at least an hourly basis, and that's what we're looking at here. This is an hourly chart time frame, so each candle on this pattern represents a 1-hour trading period. So you're very close to achieving that morning star pattern, which is a bullish pattern, and it would be interesting to see that type of pattern at the end of a rally like this. It normally happens at the end of a major decline. So that would be good news if this were to develop. But what we really need to see here from the bullish perspective would be a break above roughly 2265 and a close above there as well. So at the moment, all we have here is a break above there, but we do not have an hourly close above that point. More recently, what we have started to see here, this overall structure is starting to kind of rally and then sort of roll over here. So there are a couple of different ways of looking at this. You can either say that the share price is ready to simply roll over and roll downward, or you can make the argument that share prices have sort of rallied and now are experiencing a period of sideways consolidation that will allow the stock to sort of form a base at these upper levels and ultimately move higher based on new momentum that is able to be generated by future buying positions at these higher levels. So there are two different ways of looking at this at the moment. I mean, this is really sort of starting to round out here. So it really depends on your viewpoint at this point. Do you view this as rounding out and rolling over? Or do you view this as rallying and then reaching a period of sideways consolidation? So there are a couple of different ways to look at this, and I would say that if you are able to break above that 2270 level, then you can actually see a continuation of this morning star pattern, and then that would be the type of event that could see share prices then start to move higher. So the opposite idea obviously would be that we're rolling over here, and that share prices would then move lower. So those are sort of the two viewpoint, the ways of viewing this, two different perspectives. Um, for how to look at current price action here. So, what we're looking at the moment here, is this price movement higher, and then the ultimate price gap is at 2320. The top of that price gap has not yet been filled. The indicator reading is starting to roll over out of overbought territory, as we can see here. So, we're not currently overbought in share prices. So that does suggest that there is now room to the top side, and that share prices could continue moving higher without necessarily becoming overbought. I think that the way this currently looks, I think that we could probably, at the very least, see a retest of this 2282 region without seeing sharp prices reach overbought territory. So that would be a good signal. And then in addition to that, you do have these sort of dual trend lines here at the bottom of the relative strength index, which are both posting in the positive direction. So you've got sort of a shorter term trend here and a longer term trend, and they both are pointing in the upward direction. So those are positive developments. Um, Overall, there is still a lot of wood to chop here. I mean, this is the hourly time frame. The real question is whether or not share prices are going to be able to fill that price gap into 2320. And the real question there is whether is how many orders have remained in place since the initial period where this price gap started to form. So that would be September 11. At the moment, we have seen a fair bit of time that has passed since then. So the presumption would be that at the very least, some of those orders have been closed, either manually or automatically, and that does sort of limit the possibility that we will see a full extension into those areas. But at the moment, we have retraced most of that. I mean, we have seen most of that price gap filled to the top side. I mean, this has been a very strong rally here, and as you can see, most of this price gap here has now been filled. So I would, at the very least, I mean, even if share prices were to start to roll over and fall here, I would say that the market did actually get a fair amount of positive momentum out of this price gap, because there was really no guarantee that you were going to see that price gap filled anyway. Given the amount of time that had passed since that price gap initially formed. So to the downside, what I would really be looking at would be break of roughly 2155. If you see a break below there, I would then suggest that a top is likely in place for this near-term rally, and we would probably be seeing a top come in at 2282. The real level that I would be watching is right here. If we see a break below this level, that would sort of be the warning signal here, because that is the 38.2% Fibonacci retracement, as well as the 50-hour and 100-hour exponential moving averages. So if you do see a break below 2150, that would be your major warning signal, and that would suggest that lower share prices would be coming next. Here's the current stock market update for GameStop Corporation, stock ticker GME. Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.